Okay, so let me clear this off. Let's start all over again for the sake of those that are just joining us. All right, so like I said, we are going to talk about liquidity concept in this video. And the reason why I'm hosting this session is because I have come to realize that a lot of traders find it very difficult to understand where we have liquidities in the market, and also not understanding break of structure, because you must understand structures in the markets before even talking about liquidities, right? So for the sake that we are going to talk about for the fact that we are going to talk about liquidity, we are also going to touch a bit of market structure, because without structure there will be no what liquidity. So first of all we have to consider this. In an uptrending market, we usually have something like this. So this is a break of structure, this is a break of structure, and then this, then we have this, then we have this, then we have this, and then this. So we having something like this is what a sweep of liquidity, a sweep of liquidity, a sweep of liquidity, a sweep of liquidity. So when we are having sweep of liquidity like this, each leg that gave that sweep of liquidity is what? An internal range. This leg gave another sweep of liquidity is also what? An internal leg. This leg gave us a sweep of this liquidity is also considered as what? Internal range of internal range liquidity. And also this leg gave us this what? Sweep liquidity here is also considered as what? An internal range liquidity. So price will always come back for all these lows that gave us that sweep of liquidity. You must understand this, that every sweep in the market, price always come back to take it before going back up, except for those that give us what? A clean break of structure like this one, and also this one, a clean break of structure just like this one. Now these are all what? Liquidity. That is why most traders mistake liquidity sweep for a break of structure. So when you do this mistake, and then okay, let's say example, you consider this as what? A valid break of structure, BOS, and then there is an inducement here. Possibly, let's say you use this as an inducement, and then you mark this level as your demand. You want to buy at this level now. Price comes back here and gave you what? This sweep of liquidity, this internal range. Then at every low that swept liquidity you want to buy, I want to understand that all these levels are what? Are internal range. Price will always come back to take those lows. Now let me show you an example on the chart. So example is this. This is a sweep. This is a sweep. Now which leg swept this liquidity? This is the leg that did that sweep of liquidity. So you can see how price came back, took that low, and then moved back up. Another one here, sweep of liquidity. These are not break. This is another sweep of liquidity, and you can see this is the leg that leads to this sweep of liquidity. You can see how price came back and it took it out. Remember, the market is still bullish. The market is still very bullish. You can now see that price has taken all this. You can now see that price has taken all this internal range before giving us what? A proper break of structure. This is a proper break of structure here. But now, since we consider this as a proper break of structure, someone says you can't hear me. Can you guys hear me, please? Can you guys hear me?
Yes, sir.
Okay. So see, this is a
Yes, sir. We can hear you.
okay. Thank you very much. So since this is a proper break of liquidity, what do we expect? This is the low we have now. This is an external range. This is an external, and this is what? This is a sweep of liquidity. Stop hunt. It's either you say sweep of liquidity or what? A stop hunt. Now, considering that this is a sweep of liquidity, some people might say this is a break of structure. Now, they want to buy at this point as a demand because of what? For you to understand SMC, whether SMC or whatever model you're trading, we were taught this way that if we have a bullish market like this, a break of structure, an inducement, a demand level, price comes back here, take out that inducement and then buy, right? Price takes out that inducement and then buy, gave us what? Another break. Now look at this chart here. We have what? A stop hunt here, and we have an inducement. So everybody would want to buy at this level. Not everybody. Those people who don't really understand how structure works or understand structure in the market, they would want to buy here and target this high, not knowing that this was what? A stop hunt, a sweep of liquidity. Now, as I was saying, this leg lead to this sweep of liquidity here. This is the last low. So you can see how price came back, take out this low, and then started dropping. So in this kind of scenario, I will always look for what? Only sells. Now this is a break of structure, a sweep and a break. This is now our what? An external range. Our external range, external high. This is now a valid high. Then this is now a low. So I will not be expecting to buy at this point because I don't know if this point is going to be taken out before price then move back up, going for this external. I want you to understand that even though this is a break of structure, price can do something like this, give us an inducement and then drop, take this low before going for this external. Whenever market takes out a low, let's say we have this is our um, um, range high, and this is what? Our range low. So this range high now is coming for this low. So whenever we take out an external liquidity to the upside, price will always come back for that low, the low, the external liquidity below, because price move from what? External to external, liquidity to liquidity, zone to zone. So you must understand that whenever price takes out at an external high, it will definitely go for that an external low. Example, if you look at daily candle, for every price or every market you see, you will always see whenever price takes out a daily candle, daily high like this, it will always go for what? The daily low. This is an example. This is example of daily high, daily candle high, and daily candle low. Sorry, week. This is week. So you can see that it first of all took out the low, the external low, this previous weekly candle, before going for this external high. it took out the external high. Now you can see that the same thing happened here. An external high was taken out. Unfortunately, last week candle was unable to go for the external low. So maybe next week candle is going to target this low before pushing back up, going for the external high, because GBP USD is still bullish. It's still bullish. So now, for the fact that we understand that this is a sweep, whenever we have a sweep like this, and which leg gave us this sweep of liquidity? This, and it took it out. Now this leg gave us what? A proper break of structure here. And now, is price coming back to take this low, or is going to respect this low or this demand zone? We don't know. So that is why we have to react to price movements. So now let's go down to 1 hour time frame. Let's look at what happened within this area here, right? So for me, how I trade is this. I look out for market structure. Market structure is very, very key. Market structure is very, very key. You have to understand, whenever this is um, let me clear this. Since we have this break here, there was a break here, there was a sweep here. So there is no need to take this level as a demand zone, because just because we have liquidity, engineered liquidity here. So expecting price to go for this high, price failed. After price gave us a sweep of liquidity, price failed to take this low. It gave us this high. It failed to take out this high again. So it gave us what? This high gave us this break of structure, giving us this low. So after giving us this low, this is what we call, this is where we can say our demand supply zone. So look at what happened. Pay close attention to what happened here. So we have what? A sweep of liquidity. This is a sweep of liquidity. Sweep and then break. Sweep of liquidity and then break. So after this sweep, price came back here, tap this demand, and then drop. Another thing happened here, sweep of liquidity and then what? Break. A proper break of structure here. And then this is price use this imbalance to tap. And then again, a sweep of liquidity somehow, a sweep of liquidity and then break. Price came back here, use this low, use this high and tap to drop. So when we have something like this, let's say price is moving up and then give us this stop hunt. So after giving us this stop hunt, instead of price to go back for this external high, please mute your mic, please. Please kindly mute your mic. Please, can that person mute his mic?
Chibueze, please mute your mic. Chibueze.
Anybody that will mute his or her mic, I'm going to kick that person out. So let's say we have uptrending market like this, and then this is our low. This is what? A stop hunt. This is a stop hunt. And then price gave us something like this, an engineered liquidity, pushing up, failed to break, give us a new high, then came back, give us what? This break of structure. Giving us this break of structure, and then this is the low. This is the leg that swept liquidity here. So price will definitely take this low. So taking this low, price will come back here, use an inducement that was created here to drop. So after a break of structure here, price will always give us what? An inducement, either a sweep and break. So there must always be what? A sweep and break. This is sweep and this is break. And then what? If price failed to give a new low, it will definitely come for this internal range liquidity. I've used this model before to take a trade on Euro AUD last week, where I call it sweep liquidity, sweep model, where if you start seeing stop hunts like this, it means that price is about to change trend. First sweep, second sweep, and then maybe third sweep. And then if the fourth one failed to go below this level, it means that this high is the targeted liquidity. Price is definitely going to target this high. So once you start seeing sweep of liquidity like this to the downside, the same thing with uptrending market. If price was bullish before and all of a sudden you start seeing sweep of liquidity instead of proper break, it means that price is trying to change trend. Example, something like this. Let me use this to illustrate something. This was a sweep of liquidity. This is also a sweep. This is also what? A sweep of liquidity. And this is also what? A sweep of liquidity. So for every low that swept the high, price did what? Came back for it. This low swept this high. Price came back. It took out this low. You can see how price took it out. Let me use proper line. You can see how price took out this low. Now, if that maybe you marked out this level as a demand zone, you can see how what price did. It took out that low because this low did what? Gave this inducement liquidity sweep here. This. Then let's look at another one. Another one, this is another sweep. This is a sweep. This is another one. This is another one here. Another sweep here. So this low lead to this sweep of liquidity. This is not a break of structure. That is why this level did not hold. This is not a break of structure. This is an internal range liquidity, a low that swept this liquidity. So that is why price came back for it. It did not respect it, and also there was no inducement. It did not respect it. It failed to respect it. It took it out, took this one out. The same thing happened here. This is also what? A sweep of liquidity and also a sweep of liquidity. Now, which leg led to this sweep of liquidity? It was this one here that led to this sweep of liquidity, and also this one for this one. So price came back, took this one out, came back, took this one out as well. And now, are you going to say this is a break of structure? You will consider this as a break of structure, but I would consider this as a stop hunt. This is a stop hunt. Now, which leg gave us this top hunt. Yeah, you might consider it as a break of structure. This is that leg. I want you to understand structure first. This is the leg that gave us this top hunt. Now, this is not a break of structure, and this leg did not break structure. That is why price came back for this, and then it took it out with this huge drop to the downside. You can see, even though price was still bullish, but price came back, took it out, and then played around this area before moving to what? To take out this external liquidity. To take out this external liquidity. It's just like this. Or let's say this. Now this is our highest point. This was a sweep. Now giving us this sweep here, price is definitely coming for this this low here. Because now if you consider that this leg gave us a break of structure, you are expecting to what? To buy after price take out this inducement. You are expecting to buy after price take out this inducement. So you are going to mark out this level for a buy. But not knowing that this level, this low, is an internal range liquidity. Because this leg did not break structure. It only gave us what? A stop hunt. It only did what? A stop hunt. So price coming back here, even though we have everything here, doesn't mean that price is going to tap in this zone and kick off immediately to take this high. So immediately you take your entry here, you will see that price will come in, play around, and then give us a sweep. So this sweep now can definitely send price down again, tapping this level, give us another what? Another sweep, something like this, before start breaking structure and going for this what? External range liquidity. So this is the mistake a lot of people make. So first of all, you need to understand that we have you need to understand these three rules. Identifying a break of structure from stop hunt or liquidity sweep. Another thing is identifying the low that then the third thing is so you need to understand these three things. Identifying a proper break of structure from stop hunt or liquidity sweep, identifying the low that sweep the liquidity, understanding the external high and low. And in this diagram, I've explained this. This is a break of structure. This is a break of structure. And this is what? A break of structure. This is a break of structure. This is what? A stop hunt. So since this leg is the leg that leads to this sweep of liquidity or stop hunt, price will always come back for it. And this leg, remember that every low in the market are what? Liquidity. Every low are liquidity. Every low are liquidity. The same thing with every high. Every high are also what? Liquidity. So when price finish doing whatever thing is doing, price will always come back for every high that was created. So you have to understand this, that for every low is liquidity and every high is also what? Liquidity. Now that we have what? This stop hunt here. If we have another stop hunt like this one here, if we have another stop hunt like this, what is going to happen to this low? Price is definitely coming for this low again. And sometimes it might not take it immediately, but it will definitely come back for it. Price will definitely come back for it. Price will definitely come back for it. And when price is coming back for it, don't try to buy at every demand zone you see, please. Don't always try to buy at every demand zone you see. Always follow the market trend. So now, after price did all of these things, since this low did not give us a break of structure, that is why price came back for this low, and this leg did not hold price as what? Demand. Because a lot of people would see this level as a demand. That is why price failed to hold this level as demand. Now, this is what I would do if I were the one. Now we now have a sweep of liquidity and also what? A break of structure here. This was a sweep. This was a sweep. This was also a sweep. And this was another sweep here before this final sweep. Now, I don't consider this as a break of structure. This is a stop hunt. Now you might be asking me, why is this a stop hunt? This is a break of structure. Now look at this very well. I said that whenever we see price sweeping liquidity, instead of breaking, it means that price is about to change trend, and it will come for all this external internal range liquidity. So now there was a sweep of structure here, sweep, and then another stop hunt before price gave us this last sweep of liquidity. This last sweep of liquidity gave us this what? A break of structure. Now this is a proper break of structure. The reason why I said this is a proper break of structure is a proper break of structure will always, after breaking structure, it will keep buying for some time before coming back. And now when price is coming back, don't try to buy at this point. Don't try to buy at this point. Rather position for this area. And when price come into this area, there is no need to try buying it immediately. Wait for price to give you that bullish intent before you engage to this external high. Now look at this. So after price gave us this sweep of liquidity, it gave us a proper break of structure. This is now a proper break of structure. Why is it a proper break of structure? You can see how price continued buying to the upside after it gave us this break of structure. Price continued buying to the upside, taking out this external high. This external high that you were trying to buy at every low here. You tried buying at this point. You tried buying at this point because you consider this as a break of structure. You tried buying it here. You tried buying it here, and price did what? Kept taking you out. Price took out the first one, took out the second one, and continued dropping. Now you can see how price finally came for this external high. Take it out and then give us what? A proper break of structure again. A proper break of structure again. Now after this proper break of structure, do you think that even though this low gave us this break of structure here, do you think that price is going to respect this other block here? No. You can see how price sweep that took out the other the low. It took out the low because this low here, after giving us this proper break of structure, you have to know that this is what a sweep of liquidity at this point. This is a sweep of liquidity, and also this is not a valid OB. The reason why it's not a valid OB is because there is no inducement close to this level here. There is no inducement close to this level, even though price is in a discount zone. This from this high to this low, this is a discount and this is premium. So price came into this area. I'm not going to be looking for buy at this point because I know that this was a stop hunt. Price giving out this stop hunt simply means that price is going to take out every low here and every low here. Now, where is the low that gave us this break of structure? This one here. This one here. So now, but are we going to buy if price come to this level here? Are we going to buy if price should come to this level here? I posted this on my Telegram channel, and a lot of people, okay, I posted it on my Telegram channel, and I think I also posted it on my Twitter, but a lot of people said that GBP USD can never come to this level. They said that GBP USD can never come to this level, that I'm going too far. Now, this is a low. This is an external range low. Price is definitely going to take this low on GBP USD. Price is going to take this low on GBP USD. And the reason why I'm saying that is not just because there was a proper break of structure here, but if we go down to the 4 hour, if we go down to the 4 hours, let me remove all the charts. If we go down to the 4 hour, you see that this is a stop hunt. This is what? A stop hunt, not a break. This is a stop hunt, not a break. So this low here is also an external liquidity. This one is also an external liquidity. So price is definitely going to take out this low and then possibly maybe come for this one. So I will not be buying at this point, and I'm also not going to be buying at this point, except I see price change its momentum or direction coming for this external range high. So if I see price coming for this external range high after giving us what? An intent, that is when I'm going to buy. But for now, since price has given us what? Is trending, is trading downward, I'm not going to be buying at any of this level here. Either that one or this one, I'm not going to be buying here. So what you should be doing is following this trend, following the downtrend, because market is breaking structures to the downside. Market is breaking structures to the downside. Now let's look at market structure on this 15 minutes time frame. This is what? A high, and this is what? A low. And this is what? This is a break of structure. This is a break of structure. This is another break of structure. You can see how price gave this break of structure here, and then it's still going down, showing that this is a proper and a clean break of structure. Now this is a liquidity. This is liquidity. So price is definitely going to come back for all these highs here. All these highs here, price is definitely coming to take them out. And when price is coming to take them out, don't try to sell. Don't try to sell at any of this level here, because all these are they are not valid supply zone. They are not really valid supply zone. This one is not a valid supply zone because we can use this as an inducement to take our entry here. But am I going to buy once price come to this level? I'm not going to buy. So when price is trading into this level, what I want to see is I want to see intense. So if price is moving uptrending markets, you have to wait. Even though we have a supply zone there, you have to wait for price to do give you a sweep of liquidity and a break before you start looking for entry. And that entry, there must be an inducement that price is going to take before dropping. So you must consider this structure before selling. So it doesn't mean because price is coming inside this supply zone, you start selling immediately. Wait for price to always give you intense before you start selling. Always wait for price to give you intense before you start buying. Let's look at another pair. Let's leave GBP USD. Let's look at EURCAD. Let's look at EURCAD on the 1 hour time frame. This is an example. This is an example. This is a stop hunt. This is a stop hunt here. This is another stop hunt here. This is not a break of structure. This chart is very clean enough for you to understand. This is not a break of structure. Now you will start marking this level you want to buy here. Now look at what happened. Look at what happened here. Are you still going to be buying here now? Because this is very, very obvious that this low did not break any high. This low here did not break any high. Since this is a stop hunt, it means that it did not break this high. This is a stop hunt. A stop hunt will always after break, it then start dropping immediately. It's not supposed to be so. Now, dropping immediately to this level, you can see that price took out this low here. You can see price took out this low. You can see this sweep. So imagine you did something like this. So what would have happened to your trade now? And then you are now targeting this external high. That price is coming for this external high immediately. It doesn't work like that way. So you have to consider structures and internal range liquidity for you to have a proper trade. Now, let me show you guys a trade I took on this Euro AUD at this point here. I already explained this and I posted it on my my YouTube. Is on my YouTube, and that video has already gotten about 1.7k views in just 3 days. So now look at this. Because I understand that this was a range, this was because I understood that this was not a break of structure, I marked out this level as a low that price is going to take out. So marking out this level, I came here, I started looking for opportunities. So price took out this low, push up, It pushed up, came down, failed to create a new high. Rather, it gave us what? A break of structure. So after this break of structure, price did what? It came back here and then drop. It did what? It gave us a proper break of structure. Now, I want you to pay close attention to what I'm going to show you here now. Now, this was a demand zone. A demand zone like this, once we have a break, we call it, some people call it breaker block. But in my own way of how I consider this is, if we have a demand zone like this, and we have that sharp move to the downside, giving us a break of this demand. So demand turned to what? Demand turned to supply, or resistance turned to support. Support turned to resistance. So though the word I'm using is an advanced one, so now once a demand fails, it means that supply is in control. So whenever price comes back inside here, it will definitely drop. But are you going to sell immediately? Some people take advantage of selling it immediately. Some people wait for intense. So now look at what happened here. So demand failed and then supply now in control. So since supply is in control, this is what I did. There was a sweep here, right? A sweep and a break. This meeting is going to end. A sweep and a break, and then I wasn't on chart, so I didn't really get all of this move, what happened here. So now we have what? A supply. Price tapped into that supply, then dropped. Gave us what? A break of structure. So upon me seeing this break of structure, there was a buy trade that I took here. So I saw the first sweep that happened here. First sweep. Another sweep here. Remember what I said, that when price start doing something like this, instead of breaking structure, it start giving you a sweep of liquidity, another sweep of liquidity, another sweep of liquidity. If it does that 3 times, bro, if market does that sweeping of liquidity like this 3 times, the next one, that after sweeping this one, it went back up, the next one that came here failed to sweep again. That was when I took this trade. I took my entry here and I target this high. So at this high, you can see that this high, this leg swept liquidity, and this is already what? Demand turned to supply. And then once demand failed, supply take control. Supply is in control right now. So I knew very well that price is going to drop. So that was why when it got here, I knew very well that this entry is what, and this thing happened during Asian session. That was why I didn't take this, because I don't trade Asian session. So I took a buy from this point and I took my take profit at this point. So now, since this move did not take out this low, I knew that immediately price take out this high, price is coming for this external. And you can see since then, price has been dropping. So now I was monitoring this level to see what's going to happen. Since this is a demand zone, I marked out this high. Now this high here created this low, and this one failed. Now this demand is holding price. This demand is holding price. You can see that it's respecting demand. You can see that it's respecting demand now. Now this is what I always want to see. This is what I always want to see first. This is always what I want to see. Maybe I should understand that I'm in class now. This is what I always want to see. Price is changing its direction, respecting this demand now. So I'm going to wait to see if after price takes out this liquidity, if it's going to drop, because this can happen. Take note of this. This is Euro AUD. This can happen this week, this new week. Immediately taking this high, it will drop. Because now, some people might consider start thinking that this is break of structure, that price is going to, sorry, I don't know what is wrong with this thing. Now, do you think that after this drop like this drop is very, very huge and heavy drop for that matter? Remember, we have another demand here. And none of this leg gave us a break of structure. This one did not give us a break. Instead, this was a stop hunt. This one did not give, it was a stop hunt. This one, we can even consider this one as a break of structure. But now, we are not going to buy at this level or this level. Now, I'm very, very sure that this level is not going to hold. Price is either going to take out this liquidity and then drop, coming for this what? This other demand. So at this other demand now, if we start seeing intense, we can then buy back to this level, because this is now a key level. Remember what I said, that for every demand that fails, supply takes control. For every supply that fails, demand takes control. So now this is a demand level. So if price could come back to this level, it's definitely going to go back down again, possibly coming for this low again. So you just have to react to price movements in order for you to be able to understand. So whenever you see sweep of liquidity and also break of structure, you should be able to identify these two from this. This is a sweep, this is a break. Because if you mistaken sweep for a break of structure, you will always have problem. Let's use this remaining 10 minutes to check USDCAD. Now this is USDCAD. Let's check daily time frame. Always start your analysis on the daily time frame. Maybe I will share another link. We have 9 minutes left, or we can use 5 minutes for questions. If we cannot do it, then we can continue on Telegram. Now, please pay close attention to this. Now, this is USDCAD, and you can see that we have been bearish on this pair. Lower low, lower high, lower low, lower high, lower low, and lower high. Now, this is our last low. This low now failed to give us a new low. For if it happens like this, now this is our last low. This low created a new low, and then this low failed to give us a new low, which means automatically this high is not a valid high. It is just what? A high. This is now our what? Our high. This is our lower high. So until we see a break of this high, most especially if you see something like this on the daily time frame, that is when we consider a proper break of structure that market is about to go up. But now if we see something like this, price can come back here, grab this liquidity, and then drop. But now some people would say, okay, this is now what? A break of structure. Even though we have a candle close above this level, remember that this leg did not create a new low. So there is no point of saying that this is supply zone, that you're going to be selling from this point here. That is why price is definitely going to clear this high before dropping again. I don't know if you understand. So let's stop here. Next, maybe next week, I'm still going to have session with you guys, or maybe I can probably do a video, record a video, and post it on YouTube. Um, so we can do question and answer session right now. If you have any question, please throw your question in. Let me use this 7 minutes to answer your questions.
Good evening, sir.
Yeah.
Good evening.
Yeah, evening.
Yeah. Thanks for the opportunity of class and everything. I'm just noticing some things out, some of my errors out. But the question I want to ask you, if price is dropping, and based on what you said in this chat now, you said if price is dropping, you always wait for price to take out the closest low, like any particular low that doesn't sweep liquidity before price is reversing. So you always tend to wait for price to take out that high that did not create any other sweep from the previous sweep. So if we're looking for an entry, we should look for the we should take our entry from the next high that created it.
Okay, so if I understand your question,
That created
so this is like something. This is what you are trying to say. Let's check. This is EURCAD. Now you can see here, price gave us a sweep of liquidity, another sweep. Now price came back here. It took out this low, all this low. You can see how price took them out. Price took this one out, right? It took this one out. So price is definitely either going to take this one, because this is now an internal range liquidity, internal range liquidity, internal range break, internal range liquidity. Price gave us a sweep of this liquidity. So price giving us a sweep of liquidity now means that price is definitely coming for this low. This low did not break structure. This low did not break structure to the upside. So it is just a low that price is going to either tap this level or tap this level and come for this low. So this class was not talking about entry. So maybe I'm going to do another video talking about entry model, either liquidity sweep entry model or the one I use, because I have like 3 of them that I use. You get? So this class was not talking to talk
Thank
about
you.
entry model, but it's
I'll
just
be waiting for the entry, because the entry, my question is a little based on the entry.
Okay, your question is about entry, but I didn't really host this session for entry, but to understand proper break and from liquidity, or a proper sweep from liquidity, a proper sweep from break of structure, or proper break of structures from sweep of liquidity. Because since you mistake liquidity sweep for a break of structure, that is why I made this video, so that it can be clear. This is not a break of structure, this is a sweep. Even though price gave a candle close above, it is what a sweep of liquidity. That is why the leg that gave that sweep of liquidity, price came back, took it out, took this one out, and even took this one out. So instead of trying to mark this level to buy, you can see that if you marked this level and you place your entry here, price would have taken you out before going your way. You
Yeah.
understand? So
Hello.
yeah, I can hear you.
Okay. Please, I wanted to ask, when we are seeing a market structure in the daily time frame, let me say a buy, and then you scale down to the 4 hours time frame, and it's a buy as well, and you scale down to the 1 hour time frame, is also a buy, and you're taking entries from the 15-minute time frame. So we'll definitely be looking for a buy trade, because we have checked from the daily time frame. We have seen the market structure being a buy, same as 4 hours, same as the 1 hour. So definitely, is it right looking for an entries through a 15-minute time frame, a buy as well?
Yes, if market is bullish on the daily, just like this one now, price is bullish. Price is bullish before this break of structure. This break of structure now signifies that price is about to go bearish. But if price is bullish, all you have to do, like I said, that three rules, you should be looking for three things. Three things. where price is coming from, where price is going, and then you now look for entry. So we already know
Okay.
that this is where price, we have two sides here. We have the left side and we also have the right side. This is where price was coming from and this is where price is going now. So we already know that price is coming here. So you should be following the direction of the market, knowing where price is going. So you have to, because you have to take, before you even look at entry, you have to make sure that every demand zone here has been mitigated, because for unmitigated demand zone, price will definitely come for that unmitigated demand zone or supply. But if that demand zone has been mitigated, price is going to take it out. Price is not going to respect it. Just like this one we have here, it is an unmitigated demand zone. This is an unmitigated supply zone. That is why we have these inducements here. That is why when price take out this inducement, it's definitely going to drop.
Okay.
Do you understand? So you look at
Yeah.
where price is coming from and then also where price is going. You can see how I broke down this analysis. Sweep, sweep, sweep. For you to see sweep like up to 3 times simply means that price is about to reverse. And always pay attention to the leg that gave us that sweep. Because price is always going to come, and don't try to buy when price is coming for those lows. Don't try to buy. Rather focus on what price is doing and where price is going. Do you understand?
Sure.
Yeah. Any other
Thank you.
question?
Thank you so much, sir. God bless you, sir.
So I'm
God
going
bless
Can you
to,
hear me?
yeah, I can hear you.
Yeah, sorry. Talking about liquidity, thank you for